innovation unleashed. H-Town representing, we forever keep it rolling. Join the conversation with inspirational stories. Thought-provoking, feel that energy. Kendrick Thomas aiming to lift the community. True indeed, tune in, come and see. Giving you what you need, KTTV. Let's go, KTTV.
What do KTTV? This is KT, and I'm coming at you live with another episode of the Administrators Podcast. Now I'm here with my co-host,
JoJo, baby.
Hey, look, y'all, we are back in the game one more time. If you can see, I am on what they call it location. I'm on location today. This is the people. So, well, we're here at the World Cup. So, just came out after work for a little bit, but you know, we cannot not talk about the money. So regardless of where you at, we're gonna set up shop and kind of get it in, man. But first, Jose, man, how you been feeling, man? What's going on, brother?
Oh man, it's good times going on over here, man. I've just able to get my hands on some more packs of Pokemon this week. Bought me a few today, got me a good little chase card today. Little $20 card, out of 5 packs. Not bad. Watching this World Cup though, y'all. Viva Mexico!
Viva Mexico! Now, when you say the cards, talk to me, man. What you mean by that? Like so, say $20 pack?
Yeah. So I bought, so every set that's come out, they have what they call these chase cards that are the top value in each set. But a good set will have a good 30 cards that are at least, anywhere from $10 to $50 on up to maybe $200.
Okay.
And so today I bought some because, they're scarce at Walmart or any, because, people be buying them and flip them on that eBay, at some outlandish prices. But I bought me about 5 packs today and I was able to get me a $20 Pokemon card from one of the sets today. So that was cool. In fact, there it is, little bad boy I got today. So yeah.
I'm trying to wait till you on there golden people, man. That's all I'm waiting on, bro. I remember that dude, man. Y'all seen him, bro. That's it, man. All right, so I guess, man, without further ado, for me, we still got some of this going. Everything's still rolling. We got one more week left, 2 days, wrapping this thing up. Really good, man. Trying to come. We rolling. What they say? We rolling around third base right now. So to speak, at home, man. So we almost there, man. Got our showcase coming up. We putting in a little work on that. But other than that, dude, yeah, I'm just ready, man. I need a few days of vacation, man. Somewhere, man. Golly. So we're gonna make it happen, man. All right, without further ado, I guess y'all know that we got to get into some news because it's crazy today. Jump into it. All right, so in today's news, we'll do a little tech talk. So Google take the hit. So if you've been following Google, Google was down $100, $200, and something happened. They went way up to $400. But as of today, Google had its worst trading day in more than a year, falling nearly 5% as investors reacted to growing concerns about the AI race. The concern started when 2 high-profile AI researchers left Google for competitors. So one of them named Noam Shazir is one of the leaders behind the Gemini AI models, and he announced he was leaving to join OpenAI. Then John Jumper, a Nobel Prize-winning scientist and one of the creators of AlphaFold, announced he was leaving DeepMind for Anthropic. Oh, Anthropic, they coming up soon with the IPO, but let's see what happens. So now, can Google continue leading the AI race if some of its top talent is headed elsewhere? Was the question that investors had today, which is why you're seeing the 5% drop. And adding to that pressure, Microsoft CEO Satya Nadella, or whatever his name is, he recently suggested that AI models have become increasingly commoditized. In other words, if every company has access to powerful AI, spending billions of dollars may not create a competitive advantage. investors expect. So once again, it sounds like we're inside of that bubble, and everybody's thinking that bubble is getting ready to bust before it's over. So Wall Street is now looking for proof that those investments can generate meaningful returns. So once again, the stock market responded swiftly, with Alphabet falling nearly 5%. And you know what happens when big companies like Alphabet fall? Everything falls. So they drag several large cap technology names lower with it, which we will look at inside of the heat map. The AI race is no longer just about who builds the best model. It's about becoming a battle for talent, infrastructure, and profitability. And right now, investors are watching all three. So, man, what you think about that today?
Well, I think that you're right about when one of the big caps goes, they all go. I think it is interesting when you talk about that bubble still for the AI. I mean, I think that we've been inside or outside this bubble now for a while. I will say though that today at some point, after looking at it for watching it the most of the day, I did become a buyer, and so I did buy some for Google for out into January. So I already had some calls, so I added to them today. So we'll see what happens with that Google, man.
Yeah. And so we'll also talk about that, just for everybody who's paying attention. We'll talk about Google today in our platform probing. Let's kind of see how it's shaping up and where things are heading. So we'll take a look at our 4-hour chart and look at our 1-hour chart, which gives us a little bit of direction. Not necessarily on the 15-minute when it's time to jump in, but we'll look at the direction today. So if we just hold tight. All right, so I guess next up, man, we'll take a quick break and then we'll jump into some of our. All right, let's jump into the heat check. All right, y'all, welcome back. And so today, what we'll do in the heat check, we'll look beneath the surface of today's market. At first glance, the heat map looks ugly. Several of the market's largest technology. Hold on, wait a minute. Let me pull it up. All right, so we close down this screen. So give y'all a better look at what we got going. Then I want to share this screen. Ooh, what we got a little red out there, boy. A little red out there. So that's what we'll do. Let's see this heat map. See what we got. Yeah. All right. So now, at first glance, the heat map looks ugly. Several of the market's largest technology companies are deep in the red. See your Microsoft, your ABGO, your Google, your Amazon, your Meta, Oracle, Palantir. Oh my God. All our AI. So Google nearly 5%. Microsoft dropped more than 3%. Amazon lost almost 5%. Oracle down 5%. My God. Even NVIDIA finished slightly lower. Normally that would signal broad market weakness, but that's not what happened today. So what we know is that money was leaving the market, money was rotating. Semiconductors showed surprising strength. So when you think about those semis, Micron surged nearly 7%. Intel, which I got in, so thank you for that. Intel gained more than 5%. AMD finished higher. So several chip equipment companies also posted solid gains. Financials were strong. So within that, JP Morgan, Bank of America, Wells Fargo, and Citigroup all gained around 2%. So that's something to look at also with the financials. Industrial, they also participated with Caterpillar leading the way. Caterpillar signed a big deal this morning. I can't remember with who, with GE. I think it was GE Caterpillar. Yeah. So they're looking at data centers, all those type of things. So today, the market wasn't fear-driven selling; it was sector rotation out of large cap techs into our cities. So investors took the profits in some of the mega cap AI names, moved capital into banks, industrials, and semiconductors. that's a much healthier signal than market liquidation, which is what we will see around this time. So the key question for tomorrow becomes, will buyers return to big tech, or will leadership continue rotating into other sectors? Because if technology stabilizes while financials and semiconductors continue to push higher, the bulls may still have plenty of room to run. What you think about that heat map, man?
Man, I think that, what you said about that Caterpillar, man, them boys were up $30-something today, man. I remember we used to do Caterpillar, John Deere all the time, man. I don't know what happened with that, man.
Dude, I
know
it can't make up 1,000.
Man, that boy's over $1,000 now. Man. But yeah, man, I think it's interesting that we think about some of the semiconductors were up today. I think Broadcom is still down from where they were down last week or whatever with their when they had their earnings. Even though they had great earnings, people sold. I'm not sure when eventually the AMD run stopped. Or Micron. I'm still a little mad about that one. But overall, man, I think some of the sectors that were red, like you said, this tech stuff, man, I think we just got to shake it off, man.
Shake it off. All right. So going deeper into our next segment of the fear and greed of the heat check, we have the fear and greed index. If we look, we are still in the fear. Today it was a 35. So we still pushing over to the left. It's looking like, because I think we was we gotta think about it. Let's look and see. So 1 week ago we were at fear, but we were at 41. Previous close yesterday was 37. 1 month ago we were at a 58, and 1 year ago we were at neutral. So this is something to think about, people. Remember what I told you, when we're in the fear, we begin to start to open those positions. When we extreme fear, we want to get ready to start loading the boat, because we know it, that we don't stay in extreme fear for that long, and then we begin to push out. So right now you can start nibbling, but we do not build full position in fear. Kind of striking the iron while it's hot, because you never know where Big Donald could take this going forward. It could be. It could come out and make a tweet. Next thing you know, we're in extreme greed. So always take advantage when you see those prices drop to be able to get in on a little bit of that fear. Because others are fearful, but they say you're supposed to be
you're greedy.
Yeah.
When people are fearful, you're greedy. When people are greedy, you're fearful.
You're very fearful. So right now, it may be time to get a little greedy, y'all. All right, man. What you got to think about that?
Man, I just spot on, man. I agree, man. I think, you nibble. Last week it fluctuated like it is now, and so here we are again, man.
And our last one is our VIX. And so basically, like I said, this just moves and shows you our volatility. Usually, the higher the VIX, the crazier our market, because this is saying that people are nervous about spending that money. And so if you look at the VIX 5 days, let's look at our 5-day chart. So we were down here low. We're talking 15s. If you look at our 1 month chart, here we go, still around those 15s. Those were our lows. With some spikes in between all the way up to our 21s, right? So right now, look at that. Double bottom, took off. Here we go. Another one right here. And we could be getting ready to take back off and get back up to those 21s. So always pay attention to where if people are afraid of spending that bag, what could be happening. So always careful on that VIX. Man, you got anything to add on that?
No, I'm just like you said, be careful, man, because, especially with that boy out there, Donald Trump.
Hey,
so, we just got to make sure we out there being vigilant about everything that's happening.
Yes, yeah, man, I agree. So, because these pieces, everybody thought that the peace agreement would hold.
Yeah,
it's already on thin ice. I don't think that's
already, man. Already.
Woo! So now, I guess the biggest piece then, let's get ready to look at I want to jump to the charts. So looks like we'll take a quick break, and then when we get back, we'll do a little trading with Volatility. Let's go. right, y'all. Trade with Ortiz coming up.
I love the chase and the hunt, and I set the pace when I.
Yeah.
All right, Ortiz. What we got? Trade with Ortiz, man.
Whatever you do, man, don't be scared.
Hey,
Hey. All right, man. So we're going to go ahead and take a look at this. Got a couple names out here that I'm going to watch that we're going to talk about today. And so the first one that we're going to talk about is one of the big stocks that we mentioned earlier. We got that boy Microsoft. So if you take a look at this year chart, man, we've been fluctuating a lot from the highs. 540. We hit those 540s back at the beginning of the year, late 2025, and we've been a little bit on the struggle bus since. And so then even back to where we're here in June, where we had around a 460, we are now back to around 367. So the one thing that I want everybody to realize is we are sitting, and if I go back to the 1 month chart, man, we are sitting at an RSI of, everybody write this down, 17. Okay, so we are well on the oversold. If you look at this straight downtrend now for the past month for Microsoft, like KT said though earlier, there's a lot of things going on in this AI bubble, AI world, all of that. So we have to make sure that if it's in, and that we've got some time to move. And so yes, I went ahead and got in even more. I added to my long-term January and March calls. So I think that for the long term, I think Microsoft is there to go, even though we're a straight downtrend right now. 17 RSI right now is, for me, an opportunity. If we're going long term, I don't anticipate something real quick, but a long-term move is definitely in sight. The next one that I want to look at is kind of the same way. Been a major player for a while, but Netflix has been getting slaughtered. If you look at even from May highs of around 95, and we are sitting at 72 right now in June. So when we look at this chart for the year, look at that downward action and try to bust a move somewhere in February, March. But we are also at an RSI that is well below. So we are sitting at a 22 RSI for Netflix. So Netflix, we got 72 right now. We're sitting. If you look at how it's going, we're hitting 52-week lows for Netflix. So yeah, guys, I think that one of those unique things about this one is now January 2028 calls for Netflix. That's what I'm sitting at right now. Looking at some January 2028 calls for that Netflix. That 22 RSI again to me was very inviting. It's been getting beat up, so I do anticipate a move, but it's going to be a slow grind to the top, just like I'm saying with Microsoft. So I do believe that eventually we'll get back, but it's going to be a slow grind.
So, just never know with the AI bubble.
Yep.
There are two leaders in the game, and I was looking at that chart that you had up while I was looking at that gap. Netflix was up. Well, everybody was like, Netflix to the moon, baby.
Yeah.
And but the biggest piece is you just think about stocks that want to tear and then they split. How long it takes before they can kind of get back to the grace of the momentum they had before they split. And so I feel like Netflix is no different. I am interested to find out what is the vote price for Netflix, but I guarantee you with a 22 RSI, we got to be coming down to the vote price. All right, so we'll work on that with the RT. What we'll do, we're gonna come back into a little bit of this platform probing, but then we're gonna set this thing down. We'll be right back. Right, y'all. With fears elevated, volatility remains elevated. Money continues to flow through the market. That's why we follow price, not emotions. Now, let's do a little platform probing and see what the opportunities are. Oh, boys are back. All right, so platform probing. Let's go. All right, so Google. Let's think about the big picture. Google is one of the weakest names in the market today after concerns surrounding AI competition and the departure of key AI talent. The stock sold off nearly 5%, making it one of the largest red boxes on today's map. Now, let's look at what the chart says. So for this, I want to pull up the 4-hour chart for Google. Let's kind of take a look at that, see what we got today. Google. Okay, let's take a clip the chart a little bit, y'all. Move some of those drawings. Now we got that naked. All right, can you see that, man?
Yeah.
Okay. All right. So the 4-hour chart. Jose, I'm just gonna ask you: is this chart clearly bullish or bearish?
Now look, right now I see a double bottom.
Okay. See the double bottom.
Yeah, I see the double bottom, but it looks like it's a little bearish at the moment since it tried to break that double bottom, man.
Yeah, I'm gonna say bearish because the price is below the 9 EMA, the price is below the 20 EMA, the price is below the 60 EMA, and to top it all off, the price is below the 200 EMA.
Yep.
So that's what I call a full bearish stack. The moving averages are also beginning to separate, which tells us momentum is accelerating to the downside. Google recently attempted a rally back toward the 60 EMA. That rally faced. So if we can look at the chart, we can see how we were down here at 344, and then we started our way up, and we got up to 376. But I'll put this line across here. And so as you can see, we had a line here. We had some confusion over here. This was just below, but you can see once we got up in this area, up in this range, Google did lose steam, and so we are back to the bottom. Sellers step back in. The price is broken the major support area and is trading below all key moving averages. For the bulls, the first objective is reclaiming the 200 EMA and then the 60 EMA. Until that happens, I will say that sellers remain in control. All right, so now let's go to our 1-hour chart and let's take a look inside of Google. So now for this, the 1-hour chart confirms the weakness, right? We see still the same thing. All our EMAs, 20, 60, and 9 are below the 200. So that tells us nothing but bears in the building. Notice how every rally into the moving averages has been sold, right? See how we'll get up there, so get up a little bit more, so. The 9 EMA remains below the 20, 20 remains below the 60. The price continues making lower highs and lower lows. And that is the definition of a downtrend. So what we say, every bounce has become a selling opportunity. So what I am watching, for anybody that cares, this is not financial advice. There are two scenarios that we got with Google. We got a bullish scenario where Google stabilizes, the price proclaims a 9 EMA and a 20 EMA, then starts building higher highs, higher lows. If that happens, we could see a move back towards the 60 EMA. So we're looking on a chart. Our 60 EMA will be here at 360. This is our 60 EMA. All right, that's one. The bearish scenario, the current trend continues, which is looking like we have a nice. Hold up, man. What would you call this right here, man? We going today. What is this setup right here, man? Tell me.
Oh, that is, man, that is a woo.
I'm saying bear flag to the truth.
Yeah. Yep. Bear flag, baby. Look at that.
So now the trend continues. The moving averages remain stacked bearish. Every bounce is sold. That occurs. Google likely continues searching for lower support levels. Right now, the chart favors bankers. So, in my opinion, Google is not on my long watch list today because, unlike Ortiz, he gonna spend it bad. I try not to buy into the weakness. I try to wait for him to come into the strength. Jose he just gonna get in there, and then it's gonna turn around. But like you said, long term. So until price begins reclaiming the moving averages and showing evidence of accumulation, this remains a stock I'm watching rather than trading on. The chart and the news are telling the same story because of what we talked about in the news today. Talent concerns. So once talent concerns, we got a problem, right? Some of our thinkers that got us to this point have left. So sellers currently have control of price action. So as we look at this Google and we close out the platform program, remember our job is not to predict the market. Our job is to identify the trend. Right now, Google trend is down until the price moves otherwise. I think that's it, man.
Wow, man, good stuff, man.
Yeah, I think that's it for that Google, man. Anything you want to add to that before we close it out?
Nah, man, I think you got it good, man. A couple of chart setups in there you ever look at.
Yeah.
No.
Yeah, because I would definitely be into watching this bear flag, man. You almost gotta play that bear flag.
Oh yeah.
If it gets here, because right now it's at the VWAP touch. But you see it had a little pull back over here. It had a little push. But worst case scenario, I'm buying on the down and I'm waiting for it to get back to this level right here. I will trim once we hit this, and then I will hold out to see if we can get back down to that 341 for the second trim or for the full close of that position. Financial advice, tell you what I would do. I think that'll do it for the platform program, y'all. So, man. So I think that'll do it for this episode, Jose. Is there anything you want to add before we get ready to get out of here, brother?
Man, just remember everyone to keep an eye on all the news out there. One thing that I kind of really, I don't know if it's a good or bad habit, but every night I like to watch the futures to see what they're looking like. So to get ahead of the next day, looking at that VIX, those futures for next day, and I look at investing.com for some news. Because you never know when them boys out there going to fight about something.
Look, you know the boys. Look, that's the thing, man. It is happening so fast, man. And so, I would just say, all right, man, let's close this thing out, brother. So, that's going to do it for this episode. Today, we saw markets rally on the news of a potential peace deal between the United States and Iran, but we also saw investors question whether big tech can maintain its leadership roles as the AI race continues to evolve. We also discussed Google's sharp sell-off, the rotation happening beneath the surface of the market, fear and greed index, and the VIX, and the setups we're watching as we head into the rest of the week. But remember, the goal is never to predict the future. Our goal is to identify the trends, manage our risk. I wish I had my horn right now. Manage our risk and put probabilities in our favor. The market doesn't pay us for being right. The market pays us for being disciplined. So do your homework, build your watch list, and set your alarms. Trust the system. All right, man. This is KT and my co-host
JoJo, baby.
Hey, for the administrators, y'all. We will see y'all next week.
This is Darnell with Broadcast Houston.
This is Dr. Tamara Beckford.
Hey, this is Candace.
This is London Underwood.
This is Kirsten Bass with Inner City Greens, and you're watching.
Y'all are now tuned in to
KTTV.
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 KT